What's going on, traders? This is Stephen Place with Precision Volume Alerts, and welcome to the market primer for October 17th, 2022. Pretty wild week in the markets, right? Had the CPI number that everyone was talking about. It came in hot. It came in higher than what everyone thought it would be. And then we found buyers pretty close to the levels that we were talking about last week. It was almost to the tick with the NASDAQ as well. Then we saw... with the failed move higher, we saw an auction higher, and that failed, and there was a hard round trip back to the downside. So we're basically back where we started for the week, obviously indicating indecision. But we had a failed breakdown and then a failed breakout, basically where you should expect them to come into play. Now, one thing that I'm just thinking about a lot right now is how much of this move, or how much of the trade generated has to do with actual buyers and sellers versus just market illiquidity combined with option mechanics. Because, you come into this kind of event right here, the event gets priced in, and then as the options trade unwinds and implied volatility goes down, you see a strong rally. And then that trade unwinds and it comes back to the other side. So I think this really just showcases the lack of liquidity that currently exists in the equities market, and also technically the bond market as well. So it's just the market that we're dealing with, but our levels are still working nicely. Just some things to keep in mind. We've got a swing anchored VWAP coming into play very soon for the S&P. It has cleared above it, but there has been failed moves from that. We also have the swing VWAP from the August highs that will be coming into play if we see a little bit more of a rally here. So what we're going to do is just take off our roadmap, and we'll just take a look on a 30-minute basis. And what I'm going to do here is I'm going to set up some rectangles and just highlight some of these levels. And let's see, I don't want green. I'm going to want a blue fill, maybe a little bit lighter. I know this is like Bob Ross now. I probably should have done this beforehand. Let me pause this video. Okay, that should be clean enough. So the first level that we've got, and one more thing. One thing to keep in mind, and this is one thing that I think is crucially important, especially with, if you look at the volume on Thursday and Friday. Thursday was very high volume. Friday was pretty high volume as well. So what we want to look at is the volume weighted average price for a single day. And the way to do that is you can go here and it's going to pull it up. It's going to be hard to see, but there's this green line right here, and you can look at the individual values. So if you look at Friday's single day VWAP, it's up here. It's 361.62 and then 360.53. So both of those levels are going to be important, both on, or basically every single market. So those are very good reference levels to work with. So let's go ahead and zoom in here. And I've got these written down just so I have a nice frame of reference. First zone that we're going to deal with is 356.98 to 358.62. We've had this level on our chart for weeks. You can see there has been interactions with it, at least some stall levels. There's just a lot of pausing, and I think it's still solid. Now, what I'd like to do is just round up a little bit to about we're just going to have to make that a separate level. So I want to just mark the single day VWAPs, which is going to be 360.53 and then 361.62. So we're just going to round up and say 361. All right, and that's pretty good, right? We've seen some interactions right here and here on an intraday basis. So this is just going to be a big level to watch. I'm just going to make this bright pink so I know what it is. I'm going to make it huge so I know what it is. This is an over-under. The longer you stay above this level, the more bullish it gets. The longer you stay under the level, the more bearish it gets, okay? From here, the next level or zone is going to be 363.29 up to 365.07. Now, we did get above that on Thursday's trade, but you can see there were interactions here and here. And then once we broke out, the retest right here before we started to collect some levels on the upper zone, okay? From there, we've got, and I'm just going to draw these two really quick to the upside. And then what I would consider a big level is this swing anchor VWAP coming into play right here. Okay, and those are the big levels around 368 third and then 370 quarter. Again, this level was on our charts last week. I called it out last week, and that was the high of Thursday. So these are very good levels to work from. To the downside, it gets a little bit tricky, right? We had a hold, breakdown that failed, and then we came back into this level on Friday, all right? And this is just about as traditional of a stop run pattern you can get. You know, you have a hold, big breakdown, hard reversal, and then hold again. You know, that's how you get much better market structure and improved liquidity across the board. All right. So it would be a nice thing on Monday for that level to hold. If it doesn't, then I don't know, because there was not a lot of trade that happened. It was just this massive snapback on Thursday. But to the downside, we do have this level marked, and I haven't changed any of these levels from last week. We've got this area right around 352 and a third, and I think that this is important because if you look at how the market traded on Thursday, you can see that, yeah, there was a little bit of an overshoot, and then it did roll over, but around this level is where the stall point was for this market. So if we were to see a retracement down into it, back into the Thursday morning stall point, that's a decent bounce play to consider. Zooming out again, and we're going to expand this out. We're going to scroll this down. There's still a good level just underneath Thursday's low. That could still be in play. And then underneath that, if the market gets really loose, 339 to 340.60. And I know that there's going to be something else here, right? Odds are it's just going to be right in the middle of these two ranges, very similar like these ranges where you could see something come into play, but that's good enough. And then we have the big red level right here, 337.98, and that corresponds with a big longer term level on our roadmap, where it's just a big volume shelf that starts coming into play right here from the September, November 2020 highs, and that would be the retest. Next up is the NASDAQ, and the NASDAQ did come into, and look, I know there's a ton of stuff on here. Let me just clean this up really quick. We're going to take this one off. We're going to remove this one and this one because those aren't too important. We've got this one right here. I know it was what we call VWAP spaghetti, but a lot of these have been pretty valid. I'm going to take off this swing A VWAP for now. That was the swing A VWAP from, I believe, 2018. That's coming into play. Okay, so let's go to a 30-minute chart. We're going to zoom in. Again, one-day VWAP is 264.42 and 264.43 for Thursday and Friday respectively. So given the fact that they're back-to-back very close, that's going to be a big level. So we're just going to highlight that in bright pink. What did I say? 264 and change? 264.42. So that's going to be right around there. Okay. Again, the longer we stay above here, the more bullish it gets. The longer we stay below here, the more bearish it gets. All right. That's a very key anchor point that you have to have on your charts. So we've got a couple levels. One is right around the Friday low. And that's going to be very similar structure as the S&P. Hold, big move, collect a bigger level, and then start to hold again. If that can hold into Monday's trade and it gets above the swing A view or the one-day VWAP right here, then that's going to be much more constructive. We do have this key red line that has been on the chart for a while now, and it did hold on Thursday, so that is still a pretty big level to work with. Odds are there's going to be something in the middle. We just don't have enough data for that. Underneath that, we've got 251.89, which would be a very clever level where, everyone says, oh, the low's in, retest this, break down, and then break down and catch this level, and then that's the low. That kind of trade is probably going to continue here, just trying to throw everyone out of this market that we can. Next up, 246 and a third to 248 to the downside, and then I don't have a lot after that. Let me just double check that I'm not missing anything big. We want to zoom out. Okay. And we'll just let this populate. And then got a liquidity pocket here and then something right around here. So we'll just mark this really quick with some horizontal lines. And that's going to be I know this is a very wide range, but 273.72 to about 235.39, and that'll be, I think that's good enough for the kind of volatility we've been seeing. in terms of, what can we expect in a single day or a single week? That's 13% to the downside. Is it possible? Yes. Is it probable? No. So it's close enough to say, that would be a buy with both hands, especially if it happened quickly. To the upside, we've got this level that I think still works pretty well. That's going to be about 272.5 to 274.5. Above that, we have a gap fill with a volume shelf. And you've probably got the swinging VWAP that's going to start coming into play around that level. You can make the case just really quick for this. You can see all the volume that's traded in here. So I just want to mark either side. All right. So either we have a volume shelf right here or a volume shelf right here. And then to the upside at 286.09 to 288.26, we've got the start of a decent amount of inventory. And that would be from Friday's low, that's going to be 10%. Odds are that's not going to happen in one go, at least not in a single week. Okay, so don't bet too hard on this one. If we get it, that's a layup short, but odds are you're going to see more plays in the 279, 280 range. Taking a look at the Russell. The Russell is just marching to the beat of its own drum relative to some of the other markets with it's seeing some relative strength. There's decent rotation underneath the surface. Let me just clean this up really quick. We'll take that off and that off and that off. And I think that's good enough. Because the Russell sold off first and it hasn't really taken out its lows, that leads me to believe that there is a little bit of improvement of risk appetite. I know it sounds awful because we've been in the dregs, but that is a bit of a signal to consider, right? Where if small caps are starting to roll back up, that means a lot of the risk is in, super liquid large cap stuff that, if the bond market breaks, it's going to break harder and faster than small caps, in my opinion. But we do have some big levels coming in, prior resistance, potential support, and just a lot of stuff in here. I do have this blue line marked, which is the big LVN down here. But overall, I'm not exactly going to change any levels because they seem to be working pretty well. So to the downside, we've got this obvious level, which was the close enough to Friday's low. Underneath that, we've got a pretty wide zone right here around 159 to 161.5. And then from underneath that, we've got two levels. And again, draw with a crayon here because you don't know how much wiggle room you're going to need. We've got 157 and then 154 and a third. And again, just think about volatility expectations. If we were to pull into that, that's an 8% move. That's a lot. 5 2/3% is a lot, but a 4% move to the downside right here, that's a decent place to look for a bounce, and then we can get some path dependency. Okay, to the upside. Let me zoom back in. We'll go here. We'll go here. I've got this zone right here, and it seems to be more of a stall point than a hard reversal. So we've seen multiple interactions with it. It's just kind of a weak level. We also have this little bitty gap fill back from here, which acted here and here. So I'm just going to draw this out really quick. And that's going to be right around 170 and change. And then I'm just going to mark this one because I'm eyeballing it on the chart. That LVN is going to be a big deal, I think. So you can see how I'm drawing it against that. So 172 and a third to 173.25. And then obviously we've got this one coming into play right here, and that's going to be the swing AVWAP from there. Okay, so I think that's mapped out pretty well. On the vol markets, just really quick, the VIX it tried to come in, right? But so we've got the Fed at the beginning of November. Everyone kind of has an idea that they're going to hike 75. If we see this 34 level on the VIX continue to hold like it has been, and if the VIX rolls over, you're going to see equities go up. It is a tail wagging the dog scenario. We've seen it plenty of times. But again, the big thing right here, I think, is the MOVE index. If the MOVE index fails to see follow through and it really starts to roll over, that's the bottom. And I know that that's very reductive and simplistic to say, but if bond vol finally comes off, this is the thing that has made equities suck for months. And so this is the VIX for bonds. And it continues to make new higher highs while equity vol via the VIX continues to make new lower lows. So you got to pay attention to this. You got to keep an eye on it. Back at the beginning of the year, we had a vol of 40 and now we're at 160. Okay, I'm not entirely sure of how this is calculated. I know it's just important, right? So ideally what we want to see is a breakback below 136. And then maybe some normalization, and then potentially a rollover. And that would be the most bullish, optimistic scenario, is if the Fed finally reaches terminal, everyone pulls their heads out of their asses and plans on what they want to do from there. Okay, that's what we've got going into this week. If you have any other questions, feel free to reach out. Have a great day.